this report, the 19th of February, 2025. Right, today I want to talk a bit about the latest interest rate decision by RBA, where the RBA cut interest rates. So what does that mean? Okay, signals call, it also signal caution. So we want to talk a bit more about this. Now, the Reserve Bank of Australia, better known as the RBA, cut its benchmark interest rate by 25 basis points to 4.1% on Tuesday, marking its first rate reduction in over 4 years. Now, this move aligns Australia with other major central banks easing monetary policy as inflation moderates. The last time the RBA cut rates was in November 2020, where it slashed borrowing costs to a record low to counter the economic slowdown caused by the pandemic. Now, despite this easing, the RBA maintained a cautious stance. In its statement, the board noted while today's policy decision recognized the welcome progress on inflation, the board remains cautious on prospects for further policy easing. That's the reason why I have the title RBA cuts interest rate but signals caution. This is the caution that I'm referring to. And also, this is known as the hawkish tone. Now, this hawkish tone suggests that RBA may not cut rates as aggressively as some had anticipated. Now, if you have read my earlier report, right, they were indications that the RBA were looking into cutting rates 4 times this year. Now, this could change because right now what we are seeing is the result from this statement. Economists now expect only 2 rate cuts in the current cycle, projecting a terminal cash rate of 3.6% instead. Okay, so this is what we've seen so far. But at the end of the day, we would need more statements, clues coming out, then we will have a better idea. Well, inflation is cooling, but the labor market remains strong in Australia. Why I'm saying that? Now, data from the Australian Bureau of Statistics indicate that inflation has been steadily declining since December 2022. Now, in Q4 2024, inflation stood at 2.4%, down from 2.8% in Q3. Now, given this trend, some might expect the RBA to take a more dovish approach. However, the resilience of Australia's labour market is a key factor holding back further rate cuts. Okay. Now, you can look into here as well, over here. As you can see, inflation is actually dropping. Okay. But like I mentioned earlier, inflation is dropping. They are happy. That's why you saw a cut yesterday. But at the end of the day, labor remains very, very strong. Why do I say that? You see, first of all, unemployment remains near historic lows, hovering at 4% as of December, while employment levels right over here on the right here, you can see a reached record high at 64.5%. Okay, so the employment levels are really, really, really good there in Australia. Now, this suggests that labor market may be tighter than previously thought, reducing the urgency for aggressive rate cuts. Okay, we're not seeing that. So, trade uncertainty and its impact on Australia. One looming risk to Australia's economic outlook is the potential fallout from US trade policy. Now, President Donald Trump recently suggested he might consider a tariff exemption on Australian steel and aluminium, given the US trade surplus with Australia. This temporary reprieve, however, lasts only until March 12th, where a new decision would, whether that's going to happen or not, this exemption is going to happen, we will need to wait till March 12th, then we'll have an idea. Now, if Australia fails to secure a permanent exemption from the US, domestic steel and aluminium producers will be affected. However, the US is not a major market for Australian metals. Instead, the greater concern lies in how other major economies such as China and the European Union, respond to US tariffs. If these markets impose retaliatory tariffs on the US metals, Australian producers could become more competitive in those regions. While some resource companies might benefit from shifting trade dynamics, a full-scale trade war would have serious consequences for Australia's largest commodity export, i.e. the iron ore. Now, China's economy remains fragile, and a slowdown in its steel production could reduce demands for Australian iron ore, negatively impacting exports. Okay, so talking from a broader economic risk, although Australia's direct exposure to US market is limited, a broader US-China trade war could still have significant ripple effects. Now, if US aggressively decouples from China, Australia, heavily reliant on Chinese trade, could face disruptions. Studies suggest that a 10% reduction in global trade could lower Australia's GDP by 1.2%, highlighting the country's vulnerability to economic shocks. Okay, so regardless of whether Australia secures a tariff exemption, global trade uncertainty will likely affect Australian consumers. Imported goods could become more expensive, putting pressure on household spending. So if economic conditions deteriorate, Australia's strong labor market may weaken, leaving the RBA with little choice but to implement further rate cuts. Until then, we will still need to see. As far as we know, until further data comes out. Right now, the expectation is the Australian may not cut that aggressive than before. So that could lead to recovery in the Australian dollar, a bit of a recovery. So we have to look into that part as well to understand, and see whether it gels together with the technicals or not. Okay, so that's the report for today.